1310 WIBA and Ask the Experts, joined this morning by Tom and Nathan Plumb. They come to us from Wisconsin Capital Management, online, wiscap.com. That's WISCAP.com. Hope you've had a chance to check out the website. If you haven't been there yet, definitely head on over. You can learn more about Tom, Nathan, and the whole team. You can also start a conversation right online. No pressure, no obligation. Just go to wiscap.com. You'll see a little chat bubble there, and from there you can start that conversation. Ask any type of question you may have. Again, that's wiscap.com. That's WISCAP.com. As mentioned, joined this week by Tom and Nathan Plumb. Tom is a chartered financial analyst. Nathan is a certified trust financial advisor with an executive MBA. Tom, how you doing this morning?
We're doing very good. It has got a little frigid in Madison, Wisconsin.
Yes, it has. Although I saw later this week the chance for rain, which I'm like, that just doesn't. It kind of makes me a little nervous, but we'll see how it plays out. Nate, how are you doing this morning?
Doing well. So the Badger women's volleyball team had a big
Yeah.
victory over Texas last night, so excited about that. But like my dad, I'm kind of thawing out, and probably like the rest of Madison, thinking about Googling trips to Florida
Yeah.
and Phoenix and places like that right now.
Or even better, Googling real estate, right? As we talk this morning with Tom and Nate Plumb of Wisconsin Capital Management. If you don't like the cold, one of the ways you can avoid it is planning properly. And you can, of course, look at real estate in those warmer markets for these cooler months. We're going to talk this week about Wisconsin Capital Management and balance and sustainability. And I know Wisconsin Capital Management often called balanced account manager. And if we talked about different ways that folks are looking at their investment plans to build and maintain financial success. But of course, as you think about those things, any good plan requires some good investments to be successful. Nate, let's talk about how Wisconsin Capital Management works to find those right investments to implement a plan.
Yeah, we're very unique in that we actually look at the individual stocks and bonds
Mm.
to put in client portfolios. And we feel that gives us a tremendous advantage. It brings tremendous transparency to client and, kind of hopefully gets you the lowest fee possible. So a lot of people don't do investments. They just kind of what we call kind of paint the boxes. So they say, oh, it needs some, large cap growth, small cap value, a little international, a little of everything, and then you're diversified. We think that is just a real kind of disservice to clients overall, that you're just kind of just throwing everything in. But if you can actually look and you're paying someone to actually do real stock analysis for you, you can you have a potential to do get higher returns. And our track record that is that we have, we've gotten roughly the S&P 500 returns with a third of the risk. So
Wow. That's pretty amazing. As we talk this morning with Nate and Tom Plumb of Wisconsin Capital Management, online, wiscap.com. That's WISCAP.com for Wisconsin Capital Management. You can start a conversation right online, ask any questions you may have, get to know the team at Wisconsin Capital Management. Again, all on the website, wiscap.com. That's WISCAP.com. So, Nate, as we talk then about long-term potential, what are some of the things when it comes to investments? What are you kind of looking for there?
yeah, just sort of what does balance actually mean. So the balance, the growth part of the portfolio, the one that you want to have beaten inflation, usually the best investments that we find are stock investments or common equity. If you look up the textbook example, you're actually a minority of these firms. When you invest a few shares into Microsoft, you are actually a minority owner of Microsoft. So stocks are a little bit volatile, right? If you can model out, probably 8 of the 10 years are going to be really good, and maybe two will be kind of downside risks. With the investment selection process we have, we try to minimize those overall market risks. Stocks have a much greater potential for gain, but also you have to watch with losses. Like if you pick one of these penny stocks, they could go to zero pretty quickly. So, that's why fundamental research, we look at dozens of different financial metrics. We look at how the management teams are incentivized through the proxy statements. We look at, even websites like Glassdoor and Reddit.
Mm.
We have to have a full encompassing picture of a company to figure out, what type of investment you exactly have and know it in great detail.
It's funny, never in a million years did I think we'd be referencing Reddit for what's going on in the stock market, but it's been Nate. It's been kind of it's an interesting realm, isn't it?
Yeah, it's a new world, and there's like websites like Glassdoor that kind of look at employee satisfaction. So there's a lot of things you look at. We have this huge checklist that an intern and I made, and yeah, it's a little bit different for each company. Not each company is the same.
Yeah, I was gonna say you're probably not gonna hear many folks mention the fact that they're keeping an eye on these things, and it's really important too. We talk about things like employee satisfaction and other things really can help establish and understand kind of the overall health of a business. And I think one of the big things I know you've talked about, Nate, in the past is that the importance of diversification, and that's something that's really important with you guys at Wisconsin Capital Management, isn't it?
Yeah, so we find having stocks that are about 30, 35 stocks, you really kind of match most indices. You're diversified enough where you're diversified, and then you're also focused on your investments. So we actually know what you own, and that brings a lot of peace of mind to our clients. So we're happy to bring that.
Talking this morning with Nate and Tom Plumb. Of course, they come to us from Wisconsin Capital Management right here on 1310 WIBA. You can learn more online, wiscap.com. That's WISCAP.com. Not only can you get to know the guys and the whole team at Wisconsin Capital Management, you can also listen back to this previous show's podcast right there. The greatest feature, though, is an opportunity to start that conversation. Click that chat bubble. You can ask questions. You can, of course, get to know the guys. And, of course, no obligation, no pressure at all. Just head on over to wiscap.com. That's WISCAP.com. And Tom, we think about, as Nate there was talking about things like doing the research and the importance of diversification, it's really a balance is kind of a key to all of this as well, isn't it, Tom?
Well, as Nate was saying, the big issue, of course, is to make sure that you don't have a permanent impairment of your capital by buying something that could go to zero if it's not a high enough quality, if it's not a company that has a future.
Mm.
But the other thing that happens when you own common stocks is there's volatility. And one of the ways that you can moderate the volatility, we believe, is to have a balance of fixed income, high quality fixed income investments. And those actually have the ability to moderate that volatility and allow you to become a long term shareholder of a business that we think has great fundamentals. So, why does that work? Well, not only are bonds in general not correlated with stocks, but they sometimes during economic stress, they're actually negatively correlated. And what we mean by that is that in the times when the economy is weak and anxiety is at its maximum, the stock market is going down, what we often find is that the Federal Reserve Bank and government policies come in to push down interest rates to try to build back up the economy and the value of your stock portfolio. Well, when they're pushing down interest rates, there's an inverse relationship. So if you own a 5% bond and they push interest rates down to 3%, your bond actually goes up in value at the same time, possibly when the stock market's going down. So we've actually found that over time, and time usually being about 10 years, that you can have an ability to have less volatility, less risk in your portfolio of a certain amount of stocks and bonds. Usually it's under 40% bonds. You can actually have less volatility than 100% bond portfolio.
Mm.
And that's really significant because it really allows you to become a long-term investor in good quality equity investments or common stocks.
Talking this morning with Tom Plumb and Nathan Plumb. Of course, they come to us from Wisconsin Capital Management online, wiscap.com. That's WISCAP.com. Hope you've had a chance to check out the website. If you haven't, definitely do that first thing when you get into the office this morning, or maybe you've got the morning off and you're enjoying coffee listening to the program. Head on over to wiscap.com. That's WISCAP.com. Get to know Tom, get to know Nathan, of course, get to know the whole team at Wisconsin Capital Management. Also, great opportunity right from the website to start that conversation. It's no obligation, no pressure. Just head on over to wiscap.com. That's WISCAP.com. Start that conversation. conversation. We're going to talk a little bit about bonds. Of course, they're not without risk. We'll get some of the details from Nate. We'll talk with Nate and Tom more next as Ask the Experts with Wisconsin Capital Management continues right here on 1310 WIBA. 1310 WIBA and Ask the Experts with Wisconsin Capital Management. Talking this morning with Tom and Nathan Plumb of Wisconsin Capital Management. Tom is a chartered financial analyst, and Nathan is a certified trust financial advisor with an executive MBA. Of course, they both come to us from Wisconsin Capital Management. That website, wiscap.com. That's WISCAP.com. Hope you get a chance during the break to visit. If not, definitely at your earliest convenience, stop on by, learn more. It's a really, really great firm, and they've got a very low bar to entry as well. You hear some of these folks talking about hundreds, if not 6 figures, 7 figures. At Wisconsin Capital Management, they are for everybody. Again, you can learn more about them at wiscap.com. You can also start a free, no-obligation conversation right at the website as well. Talking this week about balance and sustainability, and just before the break, talked a little bit about bonds and some of the things that happen when, for example, when interest rates come down, what happens oftentimes with bonds. And Nate, I think some people hear that stuff and they're like, oh, it must be all roses and bubble gum, and there are some risks though with bonds, as with everything in life, aren't there?
Yeah, there's no risk investments out there. So no matter what you have, there's always some risk, and understanding those risks is really, really key. So just to recap, we're balanced investors. So again, part of that is stocks and bonds. Again, stocks being minority ownership in a company, and have been kind of volatile, as most people know, at the markets. Bonds people think are really safe, and that's kind of a misnomer. The bond market is very different from the stock market. Usually, companies issue debt, they have a big promotion, and then they're completely forgotten. That no one really follows them. There's no real analysts on bonds usually like that, but it's an absolutely huge market. So you can have bonds in many, many different things. The way that we use bonds is we kind of use them as a shock absorber for the stock market. So we do that in two ways. So when you invest in bonds, what again, a bond is an obligation for a company. So you're not a minority owner, right? You're essentially kind of being the bank to a company.
Mm-hmm.
That you can take two types of risk. One is called credit risk, and the other is called interest rate or duration risk. So the credit risk is just what's the greatest ability that you have to pay someone back, right? So they give a rating system, AAA being the best, C and D being the worst, and just like how good of are you investing from the bank, or are you investing from your Uncle Rico, right?
Mm.
So there's a big difference, and so we really want to have people that pay us back. The jargon that we use is investment grade. So that's one way that we mitigate the risks and keep the bonds fairly like a shock absorber, as I said. The second thing is your duration risk. Like, how long do you have this bond? So is this bond going to mature in 1 year? Is it going to mature in 10 years? Is it going to mature in 30 years? So typically, the further you go out from 1 to 30 years, so the 30-year bond is going to be much more volatile than the 1 year bond, because the volatility is lessens the shorter as the bond matures. And so we look at that as well. So those are two ways that you can really look and invest in bonds and how you get to moderate the volatility. We kind of go depending on the yield curve or that my dad mentioned,
Mm-hmm.
and typically for corporate bonds, you're kind of looking at something within the 5-7 range, and if the market gives you opportunities, then you can be flexible. So again, being balanced means that you're investing in stocks. For us, that's growth companies, and then in bonds, right? You're investing in people that pay you back, and then also that we keep the duration type of short. That usually creates that um, shock absorber that everyone likes during volatile markets.
Really good job explaining. I think sometimes folks hear about stocks and bonds and wonder about like bonds. What exactly are you doing there? That's a really, really good explanation from Nate Plumb. Of course, talking this morning with Nathan and Tom Plumb of Wisconsin Capital Management. Online, wiscap.com. That's whiz, WISCAP.com, all one word. So if you've got structure, to modify volatility and reduced risk, Tom, you'll still have to find, of course, good equity investments and of course, when it comes to things like compounding and those type of areas, what makes then a good quality investment, Tom?
Well, Sean, people talk about the stock market, But as Nate was pointing out, we really talk about a market of stocks.
Mm.
We're looking at individual investments because individual investments, we believe, is where you can make money. You don't make money by buying just the world or the economy or the GDP.
Mm.
You make money by having a good investment. So, what does it take for something to be a good investment? Obviously, it has to be a company that's selling something that people are willing to buy. And sometimes they're defining a new market. They have to show innovation, sustainability, and they have to be able to differentiate their products. But what do we mean by sustainability?
Hmm.
Well, basically, a business has to have some form of self financing. Just as we like to be very careful when we're buying bonds that we are comfortable that the company's going to be able to and willing to pay us back,
Hmm.
it also means that some companies who rely on borrowing on money a lot have to have a lot of people like them every day.
Hmm.
And when they don't, it becomes very difficult. So you want companies that have basically a solid business plan that looks like they can generate revenue because they have a product or a service that people are demanding. They can do it profitably and they can reinvest in their company to make sure they stay relevant. They have to balance the interests of their clients, their employees, and their shareholders. And when they do all three of those, they still then have to be able to adapt in the future.
Really good perspective this morning as we talk with Tom Plumb and Nathan Plumb, of course, of Wisconsin Capital Management, online, wiscap.com. That's WISCAP.com. A lot of great information this week and every week in the program. Don't forget, if you miss any part of the show, you can always listen back at wiscap.com to the podcast. That's WISCAP.com. Also, while you're there, great opportunity to start a conversation. No obligation, no pressure whatsoever. Just head on over to wiscap.com, click on that little blue conversation bubble to chat, and you can start that conversation right online at wiscap.com. That's WISCAP.com. And Nate, let's talk then about some of the great investments and some of the things that currently and then kind of historically, and kind of put this all in perspective for us.
Yeah, just keep in mind that companies are not static. Just as in your own life, life changes, right? And sometimes it happens slowly, and sometimes it happens quickly. Like there's little different step functions in your life, right? The same thing goes for companies. The best companies are able to adapt and execute, and publicly traded companies give off quarterly updates on their earning calls, and they give updates on their business. And you just have to watch very quickly what are the trends that they're seeing, what are issues that they're trying to solve. And sometimes the company has to take a very big pivot.
Mm.
So just to use big companies that people have heard of, like Amazon, right? Just started selling books.
Yeah.
The guy was Jeff Bezos was had doors as desks because he was just so broke. And yeah, he pivoted. It got into the marketplace, and then actually that business kind of stalled too. So then he's like, well, I need the next driver. And then he decided to go into cloud computing and made AWS.
Yeah.
And they're continuing to evolve. Microsoft as well. Remember, you always had those Windows updates that you had to put that would just crash your computer all the time. Right now, it's just they charge you monthly for that. So they updated their model, and they also went into the cloud too. And then even Berkshire Hathaway, they had like a failed stamp company, and just their businesses that were dying. And then they end up buying Geico, and that really changed the trajectory of that company. And there's so many different stories of that. Even Netflix, remember the CDs or DVDs they were getting in the mail? Like they pivoted. That was a hard pivot, and they went to streaming services, and now they're, right now they're buying out all the big boys, traditional big boys
Yeah.
of the business. So, you know, you always have to keep watching. So once you have a stock that goes up, you think, oh, I never have to think about it again. A lot of things go up and they go down. So if they don't pivot, they are the Cisco's of the world, or they're,
Mm.
some of these stocks that just don't adapt into the new world. So by listening to these calls, they give you updates, and you can give your best educated guess on which ones are following the macroeconomic trends that you can really ride that wave and, and continue to grow your portfolio in the best way possible.
Importance of doing all that research and collecting all that data and being in and understanding all those calls. That's the great thing about working with Tom and Nathan and the whole team at Wisconsin Capital Management. They are working for you. They are watching these things day in and day out. Of course, the goal at Wisconsin Capital Management, finding the right investments for you, their clients. And of course, it all starts with a conversation. If you head on over to wiscap.com, that's WISCAP.com. You can do just that starting at the website, wiscap.com. No pressure, no obligation, not going to cost you anything to start that conversation. Again, just head to the website, wiscap.com. That's WISCAP.com. It's always great chatting with both of you. Tom, Nate, you guys have a fantastic day, and we'll do it all again real soon.
All right. Take
Thanks,
care.
John. Have great holidays.
You do the same. And again, that website, wiscap.com. That's WISCAP.com. News comes your way next here on 1310 WIBA.